almost $10 trillion of bailout and liquidity injections have not yet been able to remove the crisis totally. In fact, there is a severe recession going on around the world, and something has to be done to get it over. So this raises the question: can anything be done to minimize the frequency and severity of such crises in the future? Of course, if somebody has a problem, disease or some medical problem, you go to a doctor and he'll first try to find out the cause of it. In the same way, the financial crisis has a cause or causes, and we have to first determine this cause or causes, and to be able to analyze to be able to prepare a solution for minimizing the crisis in the future. Well, according to most observers in the field, the most important cause is the excessive and imprudent lending. According to the latest annual report of the BIS, Bank for International Settlements, this is the most important cause. And why is this the case? Why is there excessive and imprudent lending? Of course, there are a number of reasons for it, but some of these reasons are the impact of materialism and secularism around the world. There is living beyond means. The consumers and firms spend too much, and there is, in addition, gambling. All these factors have together increased the demand for credit. But why is it that the banks succumbed to this demand? Weren't they afraid of losses in the future? So this is the thing. They succumbed to the demand because there was inadequate market discipline, and also there was inadequate regulation and supervision. The financial system has failed on both counts in terms of adequate market discipline as well as regulation and supervision. Let us take these in this new slide. When does the market operate effectively? Of course, when the operators in the market are afraid of losing, they take bad decisions.
Please, there is a please, we are asking all the centers to mute their mics to avoid any disturbance. All the centers to mute their microphones. Thank you. We still can hear some voices coming from some centers. Would you please mute your microphone, please?
The market operates effectively when there are incentives and deterrents. Of course, incentive comes through the profit. In other words, if you take the right decisions and you are efficient in every respect, you will be able to increase your profits. But deterrent comes through the fear of losses. The businesses will try to be as cautious as they can so as to avoid losses. So what is the reason? Is this system of incentives and deterrents not operating effectively in the financial system? Yes, this is the case, because there is no profit and loss sharing. We will see this how this affects the financial system. What is it that reduces the discipline in the financial system? Makes people very bold in giving credit, giving excessive amount of credit. Is there a false sense of security against losses? Yeah, see, this is a problem every time we give lectures. What is the problem?
We cannot hear you.
Every time I have given a lecture here, there is a problem.
Oh, yes. Yes, I think.
What happened? Shall I continue or wait? Wait a minute. Give a chance.
We cannot hear you.
We have problem with all the connections. Maybe you are the only one hearing us, Dr. Habib. Assalamu alaikum.
Assalamu alaikum, Dr. Jasper. And Dr. Chapra, assalamu alaikum.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Nice to see you.
The same here, but actually we cannot see you. We are seeing the slide now.
We just hear you.
I think we should continue, even if there is only one university listening. The rest people are listening.
What? Let him come back and see what the problem is. But this is always the case. Every time I have given a lecture,
So all the others have lost connection.
the whole system is hopeless, you know.
Okay, we continue, Shem.
The absence of profit and loss sharing has provided a false sense of security against losses due to a number of reasons. What are some of these reasons? Is it because of collateral? No, it is not necessarily because of collateral, because the collateral is essential. Even in Islamic finance, collateral is required, and besides, collateral cannot provide full security. Its value can go down for the same reasons that led to the debtor's default. So, in the case of collateral, care is needed to evaluate the collateral before the loan is given. But this is sometimes not done properly because of a false sense of security. We'll see what is it that provides this false sense. One of the things that developed innovations which help provide false sense of security is the sale of debt. If you can sell the debt you have given to somebody, then of course you don't have anything to fear. the risk will be borne by the purchaser of the debt. So why should the initiator of the debt worry about it? This has of course created a great deal of problem in the financial system, the ability to sell the debt. But of course there was a problem here. While you can sell prime debt, it may not be possible to sell the subprime debt. So a solution was found for this problem. There was securitization and collateralized debt obligations. In other words, you put the prime and subprime debt together and divide the thing into small pieces, securitization, and you sell them in the market. Now, because some of the very reputed hedge funds and banks were doing this, people had a sort of confidence that they would not be cheated. But there was a lot of cheating that was going on. There was lack of transparency. Nobody knew exactly what was inside. When you mix the prime and the subprime debt, then there has to be transparency about the extent of each that is contained in the package. If people don't know this and they have confidence in the originators of the debt, then they will be willing to buy it. Then there was also other kind of fraud, and this was the teasing rates in the adjustable mortgage rates. Teasing rates means that in the beginning you show the borrower smaller rates of interest so as to attract him. Teasing here means attracting people to take the loan. After a few installments have been paid, then you raise the rate of interest to the highest possible level, and this puts the borrowers into great difficulty. So this teasing rates in the adjustable mortgage system used by many of the originators of debt created difficulties for the borrowers. But even then, of course, there can be a problem with respect to the ability of the lender or the purchaser of the debt to get back the money. There may be a fear of credit default. So there was another innovation, and this was the emergence of credit default swaps.